Hi, I am Anna. I come from www.ntvforex.com. Non-farm payrolls data sets up gold and silver sell-off analysis. http ntvforex.com News ID AAC 0209112024 47 3 p.m. Andrew Maguire explores the market forces triggering last Tuesday's slump in the gold and silver price. Andrew Maguire explains how last Friday's release of the non-farm payroll data allowed insiders to orchestrate yet another rigged sell-off in the paper markets and why gold and silver won't be held down for long. NBSP led the non-farm payroll report. Agent banks capitalized on last Friday's release of the non-farm payroll report to carry out a rigged sell-off in the gold and silver futures markets, according to Andrew Maguire. NBSP Andrew Maguire reports that the U.S. Federal Reserve receives the economically significant data a few days ahead of the wider release. A few days notice that allowed informed agent banks to commence driving gold and silver prices lower as soon as the market opened last Tuesday. Early Tuesday, the moment the silver price rose slightly to December options sweet spot of $29.245, it was smacked down. As Andrew Maguire reads it, the organized selling event targeted silver futures in a bid to drag down the gold futures price, while flushing as many specs as possible in the process. Andrew Maguire, a wholesaler himself, reports that wholesale premiums officially rose going into the release of non-farm payroll data, demonstrating exactly how counterintuitive last Tuesday's sell-off was. A carefully calculated sell-off as Andrew Maguire sees it. These rates were carefully weighed up with a tried and tested formula. Insiders calculated how much short cover could be rinsed from non-delivery specs in the GC and SI, versus the exposure to T2 deliverable bullion demand in the FX gold and silver markets. If prices drop in the deliverable FX markets, competitive market forces lock in the deeply undervalued physical bullion for physical delivery. As witnessed on the release of non-farm payroll, when wholesale market forces secured tons of deliverable bullion at heavily unsustainable FX gold prices. NBSP however, according to Andrew Maguire, if prices are rigged below equitable supply-demand fundamentals it increasingly tightens up the real bullion available at that price. What does this mean for gold and silver? In Andrew Maguire's opinion, the amount of fiat currency chasing physical gold and silver bullion is tightening up physical bullion supply. In response, the precious metals expert believes the price of gold and silver must rise purely to meet the demand. NBSP as the precious metals expert sees it, while the massive paper market leverage always has a lagging effect, fundamentals will ultimately drive the chart-painted technicals higher. Andrew Maguire's parting thought. NBSP the consensus sees a minimum price of $32 for silver, up to $35. Theta S the minimum level NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me mt5.expert.advisors.